Hi, my name is Peter Ads. Welcome back to Invest with Peter Ads. So today I'm going to be talking about what to do in the bear market trend that we're in at the moment. So I've been making some videos since I think last year. I made a couple of videos about how to navigate, a bear market. So gradually we're stepping into a correction now towards a bear market season, because we know what's going to happen this year. There's so many random things happening around. Inflation, is up 7%. Rate is up as well. It's going to be going up rather. The rate is going to be raised like 3 times this year. Goldman Sachs believes it's going to be raised 4 times this year. And, Russia, intending to invade Ukraine is there as well. It's a big problem that the market is looking at, because if this invasion goes ahead, then market's going to crash and all that. So there's so many negative things that is ready to destroy the market in 2022. And also Omicron is not, the Rona is still there as well, destroying, life of people and communities and countries. So now how to navigate a bear market, what to do in your, around your portfolio to secure yourself, to protect your investment. So number one is be careful what you're buying this year. Well, before I go in there, please, if you've not subscribed to this channel, kindly do put your comment down below and put the thumbs up button, just to help the algorithm of YouTube to get this information to people who need it around the world and all that stuff. So thank you for doing that. So number one, be careful what you're buying this time. This is not a time to be buying GameStop. This is not the time to be buying, AMC or DWAC and all that stuff. This is the time that you need to rearrange your portfolio and understand what you're buying. Know the reason why you're buying these stuffs, and be careful. Don't get information from wrong people and people who are not going to help you, people who don't even know what they're talking about. Be careful what you are going to be buying. The next one is, don't be hasty in making any decision this time, whether you want to sell, whether you want to buy. Be very careful. If you want to buy, just be very careful. Understand the reason. Know the reason why you want to buy this company. And if you want to sell, well, you know your exit, plan. You have your exit plan in place. If you click your exit plan, well, I think once I go below -20, that's me out. If that's your plan, that's good. Go ahead with that. But I believe this is not the time to make an hasty decision that you're going to regret later on, because you don't know, anything can happen. The market can turn around and become green again. And you're going to be licking your wound and saying, well, I shouldn't have, I shouldn't have, those comments like that. So don't be that guy. So next one is DCA, dollar cost average. If you dollar cost average gradually, this method is being used for years by investors. Seasoned investors have used this, and it's helped them a lot. It's really, drive your portfolio up whenever the market turns around. If you dollar cost average gradually, let's say Microsoft is 301 today, market is still going down, so you might go below that. I'm just saying. So you want to buy, okay, I don't want to buy one. Let me just buy half. You buy half of it today. Then next week again or something like that, you buy another 150. And when it goes up a little bit, you buy another 150. Because this year we might have a long bear market season, which is going to go like 12 months or towards 2023. So if you dump all your money now, what are you going to be using to buy when it keep dipping down? So you want a dollar cost average gradually. Don't dump all your money at once. We don't know when this is going to stop, because, whenever FOMC are meeting, market is going to react negatively to that. So that's another way of getting more on your, preferred and selective. I'm saying that word, underline that word, selective companies. This is not the year you just, buy a random company because a friend or your taxi driver or your, delivery guy said you should buy this. This is not the year to buy a random company. You have to be selective of what you're going to be buying. So the next one is be careful who you're listening to. If you're not, listening to like random people on YouTube, be careful, understand who you're listening to, because if not, they're going to, probably direct you to a random company. I remember when one YouTube guy, I'm not going to mention his name, he's got over 1 million subscribers. He was talking about lemonade, and I got involved in lemonade, and I'm still holding the bag now. It's my fault. I don't know him. He's just saying his own word. Maybe he cashed out early or something like that. But I bought lemonade, when it was either when it was up, and I'm still holding the bag now. So be careful. Most of these guys probably have their exit plan, but you don't know what you want to do around that company because he has 730,000 subscribers. Then you have to say, okay, he knows what he's talking about. He might not know what he's talking about. He might have his own private plan in his mind. Just be very careful. Watch who you're listening to. The next one is take profit. Take some money off the table. See, if Elon Musk can sell Tesla, I don't see the reason why you want to keep hold of Tesla. This year is not going to be a year where you fall in love with a company. You don't fall in love with a company in a bear market. If you are in green in your position, in some of your position, take some profit off the table. I've been doing that. I don't have any, preferred or private or, my favorite company. No, I'm an investor. I'm in there to make money. When I see the future is blinking and all that stuff, I take my money out, keep it, let it draw down. When it goes down, I buy back in again. So there's no point in me buying Tesla at 700 and it's now like 800 or 900. I'm still waiting there. I'm still believing it's going to go up. And when it starts going down again, so all the profits you've accumulated is going to go down like that. So if the CEO of a company can sell it and insiders of a company can sell it, I don't know why you, an ordinary retail, investor, keeping and holding. And that's why they said, well, retail investor are dump money because we don't know when to pull out. We don't know when to cut our losses and run. We don't know when to dump. That's why they call retail investors, dump money. Don't be a dump investor, right? Take the profit off the table, because that will give you some liquidity whenever market goes down to buy more at a lower price. If Tesla go down to 700, in this bear market, and you bought at 800 and it's now 1,000, why not sell and wait till it goes down like that and buy back in again? So that's how to accumulate and compound your profits in the stock market. So that's that. Well, next one is don't worry about the red in your portfolio at the moment. If you see so many red, like -10 in some, -7, there's some of my positions that have got -80%. That's lemonade. I'm still going to say lemonade. I bought lemonade over $100. That was in 2020 or 2021, early 2021. And now lemonade is around 40 something. So it's my fault. I'm not selling. It's a good insurance company. I'm not selling because I'm a long-term investor. I believe this company is going to do well in the future and all that. So I'm keeping it. I'm not taking a loss on that company. I'm keeping it. I don't care if it goes to $20, I'm still keeping it. I'm forecasting 5-10 years for this company. So I'm not selling at a loss. But the green positions that I've got, I'm selling those green. I'm keeping this profit to take advantage when the market. So if you see so many red in your portfolio, don't worry about it. In as much, it's still there. Once you click it, that's when you registered your loss, that you're taking that loss. But if it's there, you're looking at it, don't worry about it. Some people say just have the habit of not checking your portfolio every day. If that's you, then that's good for you. If you want to, randomly check your portfolio, that's good. If you know your health is not that good and you don't want to be looking at today you have -$10,000. The other day you have for example, Nasdaq has been down this week, almost -7% this week alone. So if people like that who invested a lot of money, okay, I'm down today, -5,000. You can't even tell a friend how much you are losing in the market. So if that is you, don't go and look at your portfolio randomly. Just be very careful. Don't go there. Just leave it there. Watch the news, what the market is saying and all that stuff. So, and last one is, this is going to be a stock pickers year. Like I said earlier on, you are going to be selective in what you buy. Look out for those big value companies, those companies they're fundamentally strong. They have big money in reserve. They have enough money. The market cap is large enough. They have little to nothing, no debt and all that stuff. P ratio is little, is small, it's not large and all that stuff. So those are the companies you want to be investing into. Look at what happened to Netflix. Netflix, reported their earnings yesterday, and it went down straight away, -20%. Netflix is around top 500 and something dollars. Now it's 400 and something dollars. Now maybe today when the market opens, because I'm recording this before market opens, so maybe today, by the end of Friday today, Netflix might be around 300 and something dollars. So that's good company you want to dollar cost average into. So you have to be selective in the companies you're buying. So let's talk about let's move on to Joe Biden said on Tuesday. Joe Biden, he had a meeting with the press at a press conference on Tuesday, and he's talking about like what's his plan for this year, because midterm election is coming and all that stuff. So they were asking him a question. He was talking about like what's happening to US, that US will be self-reliant on chips, that because they can't get chips, enough chips in US. That's what's affecting all these brand new vehicles are becoming expensive. And the second-hand vehicles are, even some second-hand vehicles are more expensive compared to the brand new one. Can you believe that? So that is what he said. So he said US very soon is going to be self-reliant on his own chips. That's what he said. He's a politician. You can believe it or not. Well, and he said Build Back Better plan that he said is going to be reignited. Well, I don't know how that's going to go, but Manchin, sorry, I can't get this guy's name correct. Senator Manchin, he said, well, I don't think he's still going to be able to go with that bill, but we'll see with time and see. Infrastructure bill is still there, lying down there. No one is talking about it anymore. And he said, inflation, that's what Joe Biden said, inflation is caused by supply chain, that they're going to fix the supply chain, which is going to really help the inflation to cool down, inflation to some bearable level. That's what he said. Well, if they can't do that, because most of the, fuel is gone up and all that stuff, people can't get enough food on their table because price of stuff is gone up in the supermarket and all that stuff because supply chain is being affected. So he said they're going to fix that. So if they can fix that, it's going to probably bring down the inflation to some minimal level or endurable, standard and all that stuff. So now he's talk about, they ask him about the Russian invasion. What's the plan? He said, well, if Russia invade Ukraine, NATO and his allies are going to move in swiftly to their, plan. They got plan A, plan B, plan C. So it's going to be so devastating for Russia if they move an inch to take over Ukraine and take over the government in Ukraine. And this is the catalyst that's probably going to affect the market, because if Russia eventually move into Ukraine, the gas, electricity and all that, the price is going to skyrocket for Europeans, for those who live in European, geographical locations and all that stuff. Especially look at European countries like Germany, UK, France and all that stuff. Most of them, they get their supply from Russia, the gas supply. In short, Russia supply almost 50% of gas supplies to the whole Europe. So if something like that happened to Russia, Russia is going to cut the line. It's going to cut the supply chain and all that stuff. So the price of energy and gas, oil is going to skyrocket for Europeans, those who live in Europe. It's not going to affect the US, citizens to a bit. It might affect the market though, the European market and all that stuff. It might draw down NASDAQ and S&P too as well at some point, but it's going to affect mostly people living in European Union. So, and also the Russia were negotiating, like they don't want, anyway, that's all politics. I don't want to go in there. But we investor, we always look at what's going to happen to the market, or what's going to happen that can affect or that may have influence, on our investment. That's why we talk about politics. There's no way you can be an investor without, checking into politics sometimes randomly and all that, because you want to be ahead of information to know how you want to put your money into some places and all that. So you have to be selective in what you're buying. If I were you, I'll be buying more of energy at this point and financials, And lastly, earnings season is here now. Next week is going to be earnings season for this big tech company. Hopefully, the report is going to be good and probably cool off a bit of tension and the issue around this drawdown and all that stuff. So look out for big companies that have drawdown and pick up, one or two stocks. And whenever the market turn around, you're going to be there happy that you took the advantage, you took the opportunity of the market drawdown. So guys, that's all for today. That's the review, and I'm going to be seeing you next time. My name is Peter Ads, and I'm going to see you next time. Bye.